Predicting the price of gold several years out is a complex task, influenced by a myriad of economic, geopolitical, and market-specific factors. While no one can forecast with absolute certainty, we can analyze the key drivers that are likely to shape gold's trajectory towards 2026. Key drivers influencing gold prices. 1. Inflationary pressures and monetary policy. One of gold's primary roles is as a hedge against inflation. If global inflationary pressures persist or re-emerge significantly by 2026, driven by supply chain disruptions, commodity price surges, or expansive fiscal policies, demand for gold could rise. Conversely, if central banks globally manage to tame inflation through aggressive monetary tightening, higher interest rates, the appeal of non-yielding assets like gold might diminish, at least in the short term. However, very high real interest rates minus inflation tend to be bearish for gold. By 2026, the market will likely have a clearer picture of whether central banks are shifting towards more accommodative stances, which could be bullish for gold. 2. Geopolitical instability. Gold has historically served as a safe haven asset during times of geopolitical turmoil. Conflicts, political instability in major regions, trade wars, or significant international tensions can drive investors towards gold as a store of value. The current global landscape remains volatile, and any escalation of existing conflicts or emergence of new ones could significantly boost gold prices. 3. U.S. dollar strength and interest rates. There's an inverse relationship between the U.S. dollar and gold prices. A stronger dollar makes gold more expensive for holders of other currencies, potentially dampening demand. The future strength of the dollar depends on various factors, including U.S. economic performance, interest rate differentials with other major economies, and its role as the world's reserve currency. Similarly, rising real interest rates, nominal rates minus inflation, tend to make gold less attractive compared to interest-bearing assets. By 2026, the path of global interest rates, particularly those set by the Federal Reserve, will be a critical determinant. 4. Supply and demand dynamics. While less volatile than other factors, the fundamentals of supply and demand also play a role. Gold mine production, recycling rates, and demand from major consumers like India and China for jewelry and investment, and central banks for reserves contribute to price movements. Central bank gold purchases have been notably strong in recent years, signaling a diversification away from traditional reserve assets and potentially providing a floor for gold prices. 5. Investment demand and market sentiment. The overall sentiment of investors towards risk assets versus safe havens significantly impacts gold. During periods of economic uncertainty or stock market volatility, investors often flock to gold. The growth of gold-backed ETFs and other investment vehicles has also made it easier for retail and institutional investors to gain exposure to gold, influencing its demand. Bullish scenario. Persistent inflation, increased geopolitical instability, e.g., new conflicts, major trade disputes, a weakening U.S. dollar, and a shift towards more dovish monetary policies by central banks could propel gold prices significantly higher. In this scenario, gold could test and potentially surpass its all-time highs. Bearish scenario. If inflation is successfully contained, geopolitical tensions ease, the global economy experiences robust and stable growth, and central banks maintain relatively tight monetary policies with high real interest rates, gold might struggle to gain traction and could see moderate declines. Neutral, moderate growth scenario. A mixed bag of factors where some bullish and bearish elements balance each other out. Gold might consolidate around current levels with gradual upward movement, acting primarily as a portfolio diversifier rather than seeing explosive growth. This could happen if inflation remains moderate, and geopolitical events are contained without escalating into major global crises.